You checked your bank account this morning and something's wrong. Your paycheck is smaller. Ever wonder how you can lose money without getting demoted, missing days, or taking a pay cut? Today I'll explain why your take-home pay shrinks even when your salary stays exactly the same, like you're 5 years old. By the end, you'll know exactly where your money went and the 3 levers you can actually pull to get some of it back. Here's what nobody tells you about paychecks and how they actually work. Your salary is not what hits your bank account, at all. That big number on your offer letter is just the starting point, but you never get to keep the whole thing. Before it reaches your account, slices get carved out everywhere. Federal taxes take a slice, and state taxes grab another one too. Social Security and Medicare each take their cut. Then health insurance jumps in and takes its share. Then dental, vision, your 401k contribution, maybe an HSA, possibly that gym membership you haven't used since February. Your take-home pay is whatever's left after everyone else has eaten. And here's the thing that breaks people's brains. Those slices can change size even when the total stays exactly the same. Think of it like your monthly subscriptions that keep going up. Same services, same features, but suddenly Netflix costs $2 more. Spotify raised its price, and your phone bill crept up by $5 too. You didn't add anything new, but your total monthly spending jumped $20. That's your paycheck. The salary stayed the same, but the cost of getting it to you went up, and you're the one paying the difference. The most common culprit is January, when everything resets. Health insurance premiums almost always increase at the start of the year because insurance companies love a fresh calendar and hate your budget. That plan that cost you $200 per month? Now it's jumped up to $240 per month, sometimes more if you're older or your company switched providers. You're getting the exact same coverage, same doctor, same copays, but now it costs more. It's like your landlord raising rent, but your apartment didn't get any bigger. Then there's the sneaky one, 401k auto-escalation that nobody notices. Lots of companies automatically bump your retirement contribution up by 1% every year to help you save more. Future you is thrilled about the extra savings, but present you just lost $80 per paycheck without anyone asking permission. You're sitting there wondering why you can't afford groceries this month while your retirement account is quietly getting fatter. It's like someone reaching into your wallet every payday and stuffing money into a piggy bank you can't open until you're 65. Benefits re-enrollment is another trapdoor that catches people. Every fall, your company makes you click through open enrollment. Pick your insurance, confirm your choices, sign the digital forms. Most people just put it on autopilot and click through it. Maybe you accidentally upgraded from basic dental to premium because the buttons looked similar. Maybe you added your spouse or your kid to your plan. Maybe you signed up for a flexible spending account because it sounded smart. You made one decision in November, and now every paycheck in January is lighter because of it. Now here's where it gets wild. Tax withholding is completely invisible until it's not. Your employer looks at your salary, checks your W-4 form, and calculates how much federal and state tax to pull from each paycheck. But that form doesn't update itself automatically. Maybe you got married last year and never told payroll. Maybe you had a baby. Maybe you picked up a side gig and now you're earning more total income, but your main job doesn't know that. Or maybe you moved into a higher tax bracket because last year you had a signing bonus or sold some stock. Now your payroll system thinks you're making way more than you actually are, so it's withholding extra tax from every paycheck. Here's the emotional punch that nobody talks about. It feels like someone secretly changed the rules, because they kind of did. These changes happen automatically through algorithms, HR software, and insurance company spreadsheets. And nobody sends you a letter that says, hey, your paycheck is about to drop by $143. You just find out when your rent check bounces, or your grocery budget suddenly doesn't stretch. This matters to you because most people only notice when something breaks. A bill doesn't get paid on time anymore. Your savings account stops growing like it used to. You start wondering if you got a secret pay cut or if your boss hates you. You didn't imagine it. The money was real. It just got redistributed before you ever saw it. So here's your paycheck audit, and it takes 5 minutes. Pull up your pay stub from 2 months ago and your most recent one. Put them side by side on your screen, or print them out if you're feeling old school. Now go line by line and circle every number that changed. Don't just stare at the final total at the bottom. Look at federal withholding, state withholding, health insurance, dental, 401k, HSA, FSA, every single line. One of those numbers got bigger, and that's your thief. Once you find it, you've got 3 levers you actually control. Lever 1 is your W-4 withholding form. If too much tax is getting yanked out every paycheck, you can adjust your withholdings so you keep more money now. That refund feels nice, but it's just your own money being returned to you after the government borrowed it interest-free. Go to your HR portal, find the W-4 section, and if your situation is simple, single, one job, no side hustles, just follow the basic instructions. If it's more complicated, use the IRS withholding calculator online. Takes 5 minutes and it'll tell you exactly what to put on the form. Lever 2 is your benefits tier. If your health insurance premium jumped and it's murdering your budget, you can usually change plans during the next open enrollment. Some companies even let you change mid-year if you have a qualifying life event. Downgrade to the high-deductible health plan if you're relatively healthy and almost never go to the doctor. Pair it with an HSA so you're saving pre-tax money for medical expenses. You'll save a chunk of money every paycheck, and if you don't spend the HSA funds, they roll over forever. Lever 3 is your retirement contribution percentage. If your 401k got auto-escalated and it's too aggressive for your current budget, you can log into your retirement account portal and lower it. Yes, future you wants that money growing. Yes, you should save for retirement. But present you also needs to eat and pay rent and not have a panic attack every time you check your bank balance. Find the percentage that doesn't make you feel like you're drowning. You can always increase it later when you get a raise. Here's what makes this fixable. You're not stuck with whatever your paycheck happens to be. You just need to understand that every deduction represents a choice. Sometimes one you made intentionally, sometimes one that happened automatically. Those automatic changes are designed to help you. Better insurance coverage, more retirement savings, proper tax withholding. But they don't care about your grocery budget this month or your car payment next week. And here's the truth nobody wants to admit. Your paycheck is not just your salary divided by 24 pay periods. It's a dozen micro decisions you made or didn't make, locked into a system that adjusts the numbers automatically. Every benefit selection you click through without reading. Every form you signed on your first day and never thought about again. Every auto-escalation features some HR software enabled by default. They all reach into your paycheck and take their piece before you ever see a dime. You're not helpless, though. You're just uninformed. And that's the difference between wondering why you're constantly broke and actually understanding where your money goes. The system runs on autopilot and assumes you're paying attention. Spoiler alert, nobody's paying attention because we're all too busy working the job that generates the paycheck. But once you know where to look and which levers you can actually control, you stop being a passenger in your own financial life. So pull up your pay stub right now and compare it to last month's. Which line item changed? How much did it cost you? And are you going to fix it or just let it keep happening? Drop your answer in the comments because I guarantee someone else is dealing with the exact same paycheck thief and has no idea where to start looking. If you enjoyed the video, make sure to like and subscribe and make sure to leave a comment on what topic you'd like to see next. Thanks for watching.